is Savjit Chatterjee recording our weekly session of Chartsarefun. This is for the week of July 13th, recording this in the afternoon of July 19th. Our Chartsarefun, there are two services. Our blog site is at chartsarefun.substack.com. We appreciate you subscribing to it. It's daily blogs, and it'll be sent to your email as soon as they come out. Our YouTube site is also at Chartsarefun. That's a channel. If you could subscribe to it, we do publish weekly videos. We do believe there are tremendous fun insights in these charts. We don't share investment advice, so please use these fun insights on these charts for making your trading decisions. But the key is try to be able to read the tea leaves of the market from technical charts and technical patterns. We're going to talk about the semiconductor industry. Last week was a breakdown week. We had been talking about some bearish patterns in the semiconductor industry. In particular, what we're showing here is the daily chart. We can see that from that peak that happened on June 22nd, around 656. The semiconductor index ETF SOXX, SOXX, which is the iShares ETF, has formed a bearish head and shoulder pattern, and the breakdown happened last week. There were few negative things with respect to Chinese model. Kimi K3 came out. It's matched Anthropic at a much cheaper cost. It's an open source model, and it hit the world by surprise that China is beginning to create pretty competitive models at much cheaper cost than what we have with the frontier models with Anthropic and OpenAI. Their recent models have also come out. Anthropic made a lot of news with their Mythos model that had really shaken up the market. And then, from their Fable 5 came out. Initially, the government kind of put a hold on the model's releases, but then end of June, the models did come out. And then OpenAI's recent 5.6 model came out as well. This particular model, the Kimi K3, turned out it's from a company called Moonshot.ai. It is come out to be quite competitive model, and showing in terms of beating in benchmarks, key benchmarks, beating or even getting close to what Anthropic does, was an interesting tidbit that did shake the market up. Semiconductors in particular didn't do so well with reaction to earnings. There was Micron earnings in late June. It sold off after that. And then more recently, we had TSMC's earnings last Thursday, and that sold off as well. So those reactions to earnings has not been good. What we see here is a classic head and shoulder breakdown. There is volume on the breakdown as we see here. However, it didn't close at the lows of the day. It recovered. It closed higher than where it opened, and it was down 1.6%. But at the lows of the day, it had touched below 500 at 498. If you do a measured target from us 536 to roughly 656, that's 120 points. Subtract 120 from 536, we're talking about a 416 is where potentially this measured target is. That said, there's a key support on SOXX at around 470. We can see this horizontal line that has been drawn as support. We have to see if it heads down next week with any additional weakness, catches a strong support at 477, 470, and then maybe does a rebound to test that key support from where it broke at 533, 536. So that's a potential possibility, but for the near term, a key barometer of the semiconductor, which actually has quite diverged from the regular memory stocks and the other big chip manufacturers, is NVDA stock, which, as we know, is the king of AI. NVDA stock on the daily chart diverged in the sense that when the semiconductors were coming down from that June low, look at what NVIDIA did. NVIDIA bottomed at late June, and from there in a counter trend way has been rising. If this turns out to be an inverse head and shoulder, we do not know yet. We have to see if it breaks above 213. That move from a 189.8 to a 213.8, we are talking about roughly $24. A $24 added to 213 takes us to 237.82, which is slightly above the 236.26 we saw in May. We know that NVIDIA does pick momentum ahead of earnings. The earnings won't be till third week of August or so, and it tends to peak after the earnings. That's what happened in May as well. It peaked just before the earnings and then from there sold off. Potentially another climb in anticipation of strong blowout earnings from NVDA could cause that climb. So this is one indicator we are watching. If NVDA, which is a reasonably large component of the SOXX, continues to climb, maybe it helps SOXX from breaking down just yet. That's something for us to look at. QQQ, which we have in the past shared a bearish pennant formation. Now, pennant does not mean bearish. It could also be bullish. It depends on which way it breaks higher or lower. This was a bearish breakdown in QQQ. However, it did not close at the lows of the week. The lows was from a retest of the previous 686 level. It tested 686.76, a slightly higher low from the 685 from 62 from the late May low. And if this maybe, yes, there is negative divergence with the RSI at lower highs. We can see MACD histogram is about to dip lower. This breakdown could, of course, get us a lot lower. So from a 747 to a 685, we've been talking about that. That's roughly 62 points or so. If that 62 points subtracted from 685 takes us to 623, that's potentially a possibility. It's slightly below the rising 50 period moving average at 629, is if this QQQ breakdown shows up. That said, a very interesting tweet from a technician that we hugely respect. His name is Mo. His X handle is Option Flies. He's out of Chicago, a lot of trading experience. He does a lot of Fibonacci kind of cycles and Fibonacci kind of predictions. And he is highlighting a very interesting pattern that in the three key levels of resistance that the market has fought in the past before it broke down, one was at the 6,000 level from S&P from late 2024 into early 2025. It took a span of 48 days for it to test to try to break above the resistance. Then it failed and then broke down. In a similar way, at that next key resistance from 6,000 to 6,900, or similar kind of 48, in this case, 50 days, the market tried to break above that resistance. However, it could not from a range-based pattern for 50 days. Then it broke down. He's measuring the current situation where we are at a key resistance at 7,500. Could we fight this range and then break down? That said, that 49 days he calculates measures to August 11th. We know that technology earnings will be mostly done by then, except NVDA. NVDA tends to come out later in August. So it's potentially possible that if you don't have, as market is thinking, maybe with a very hawkish Fed, which is from Kevin Warsh's previous June meeting, there was some indications because he said that the Fed is going to be watching price stability way more than the employment conditions, because they have dual mandates. They have mandates on employment in terms of maintaining low unemployment and also maintaining price stability. He said that the Fed was focusing on price stability, and we do know with the recent CPI and PPI prints, things have been trending lower with oil prices coming lower. So if there is not as much of a hawkish stance from the Fed in the late July meeting, potentially maybe S&P could be range bound in that 72 to 7,500 level before quite breaking down. So that said, if this August 11th is when the 49 to 50 days happens, and then maybe we get the breakdown, this could mean that S&P right now, as we can see here, is at the verge of breaking below its 50 period moving average. The 50 period on the daily moving average is 74.64. It closed at 74.57, slightly below it. That said, it could stay range bound in between from the 7,400 to maybe even the 7,300 to the 7,600 for another couple of weeks because of earnings, maybe just reasonably being strong on the technology front and maybe not so hawkish Fed, and then perhaps break down. We do see that the 50 period moving average has diverged a lot from the rising 200 period moving average, though both are climbing, which is a bullish pattern. And we do see that MACD is kind of setting to go break below the zero line. But in the past, the similar thing happened in earlier in the year, that it stayed range bound and MACD had dipped below the zero line, but it stayed kind of steadily in up and above the zero line for quite some time before breaking down in March. So we could have a similar situation. It could be staying in that just about flattish on the zero line for another couple of weeks before breaking down like it broke down in March towards September and October. And in that case, that breakdown, if you do get that breakdown, a 72.37 to a 76.20, we're talking about 400 points or so. 400 from 72.37 takes us towards 68.37, maybe a little short than 400. So maybe towards 68.50 is potentially possible, which is slightly below the rising 200 period moving average at 69.87. So that's a possibility that we could get a test of 7,000 if the market eventually breaks down. But potentially, from what Option Flies is talking about, this periodic move for range-bound move for another, right now it says till 49 days, so that goes on till August 11th. It could stay range-bound till then before the breakdown happens. So we'll see what the market does. We are, in principle, to wrap up, worried about this head and shoulder breakdown in the semiconductor ETF. That breakdown tests a next key, so it broke down below 536. The next key support level is 470, 477. It hopefully holds that one, maybe gets a counter trend rebound towards the breakdown level of 533, 536, and then maybe the breakdown happens later in August into September, potentially after NVDA earnings. A key thing we are watching is NVIDIA's potential bullish sign. It tends to rally and peak before its earnings, so we still have about 3 weeks or so or more of NVIDIA ahead of us before its earnings comes out. If this inverse head and shoulder breakdown comes with any bullish news with respect to the fundamentals of NVIDIA, in anticipation of good blowout earnings, we could expect, and guess what causes NVIDIA's momentum? It's the CapEx spending. So with Google's earnings, with Amazon's earnings, with Microsoft's earnings, if they continue to discuss strong CapEx spending, that would cause some upside in NVIDIA. So that's what investors will be watching, is what the CapEx spending numbers are from these hyperscalers, from these big cloud vendors, and that could cause that NVIDIA breakout. A breakout from 189 to 213, we're talking about a $24 breakout. 24 to 213 is 237, or slightly higher than 236 that its May peak was. So that form of a double peak, 236, 237 of NVIDIA, cannot be ruled out. And on the QQQ, that pennant could have broken either way. Initially, it turned out to be a bearish breakdown. It broke down below the rising trend line from the joining of the lows and closed below it. But that said, if we do get some range-bound movement in S&P, as the Twitter handle of Option Flies is talking about, we could perhaps stay range-bound here in QQQ from that low of 686 towards an upside of maybe 720. So from that level, we could maybe see that range-bound move, and then maybe eventually a breakdown. If that breakdown does come below 685 to 747 is about 60. 62 points from 685 takes us to 623 is potentially where we could get. So with that, good luck investing. We'll talk to you next week. Thanks again and listening, and appreciate you hitting the like button on the video. Thank you so much.
We are not registered investment advisors and encourage our users to consult with their financial advisors before making investment and trading decisions. Nothing contained in our content constitutes a solicitation, recommendation, endorsement, or offer by us at Chartsarefun or any third-party service provider to buy or sell any securities or other financial instruments in this or in any other jurisdiction in which such solicitation or offer would be unlawful under the securities laws of such jurisdiction.